In this video, I am literally going to show you how I was able to do my $4,000 account into 40K. And this is all literally live trading here on this platform, YouTube.
Keep it loaded, most silent. Yeah, I get it loaded. Just ride the play. If you ride the way,
now, if you haven't been tapped into anything that we got going on, this is why I recommend you subscribing to this YouTube channel so you don't miss out on anything that I drop from videos like this, where I get very detailed, and also where you don't miss out on our live streams where we had a lot of people had success from knowledge, from passing challenges, growing accounts, and being consistent. So make sure you hit that subscribe button, and let's go ahead and continue. So in this video, like I said, I'm gonna basically be breaking down my journey that I started literally 3 months ago. Is where we started our very first stream here on the YouTube platform in October. Now, I already had set goals from everything from risk management to my strategy and my mental. In this video, you're going to learn pretty much everything as far as what my actual risk was and a lot of my trades I took. Also, you're going to learn the psychology behind me doing this, and most importantly, you're going to learn the strategy in a little bit more detail as far as how I was able to do this. So if you guys have any funded accounts or anything you want to do as far as a growth wise or be consistent, don't skip past this video, because if you guys skip past it, fortunately, you're gonna miss out. So first and foremost, for me personally, I knew what I was getting myself into when I was doing my personal account. Now, I also have a funded account that I was also trading in the live stream as well. With my funded account, I do not risk no more than 1 to 2% overall. After that is being said, when I'm dealing with my personal account, I go a little bit more extreme. I know what I'm getting myself into and I know how to handle it. So for me, I handle anywhere from 10 to 15%, and sometimes I will even breach it to 20%, but that was only twice when we did that live. If you haven't seen the video, make sure you subscribe or make sure you go back to watch those videos. But overall, 10 to 15% is what I am looking to risk overall on my account. A lot of you guys say that's ridiculous. A lot of you guys say, oh, that's nothing. But it's not about what it is as far as, oh my gosh, this is ridiculous. It's about consistency. If you guys actually know what you're getting yourself into and all of that, you're good. And obviously, I'm proving it right here, right now. So here we have my example of kind of what my thought process is as I'm growing an account. And this is what I want you guys to focus on. So when we are looking to take upon an account, it is a trading plan that is literally going to make you successful. A trading plan is going to make you disciplined. That's the only thing I can tell you that will help with your discipline, your psychology, but it does take obviously experience. But for the most part, this is the starting point. When you get into risk management, you have your knowledge of knowing what you want to risk. So for me personally, when I'm dealing with a funded account, I'm only risking anywhere from 1 to 2% overall. And when I'm dealing with a RR, I am looking for anything from a 1 to 2 and above. The reason being is because I like to enter in the same position roughly in multiple trades. For this example, when I talk about my compounding strategy, which literally is the biggest reason that got me to where I'm at with this account so rapidly, you guys will truly understand why I look for 1 or 2s and above. So let me break that part down a little bit. What I basically mean is when we're looking at market, you guys see here that I have my TP1 set here. Not only my TP1 is set here, I have TP2 set here. Not only TP2 is set here, I have TP3 set here. Usually TP1 is my 1-on-1, TP2 is my 1-2, TP3 is typically my 1-3. Now, guys, when I talk about this, I am literally referring to how to compound with minimizing your risk as low as possible to none. Guess what? When TP1 smashes, for instance, when you're looking at gold, for example, we called this out earlier today in the VIP. I said, guys, let's buy gold. TP1 smash. I end up making $900 off that trade. Now I was in a second position with this trade at the same entry point. Now, since TP2 smash, well, basically before I get into TP2, what actually happened is once TP1 smash, I now move my stop loss to break even, and I take out the one trade, which made me $900. Now that this is a absolutely risk-free trade, a lot of traders cannot handle this part right here because they see greed. They want to get out of trade early. They just want to take all their profits. But if you guys really want to compound your account, this is how you have to do it. Now, guys, when I talk about 1-on-1s, 1-2s, I don't just enter and just look for the 1-on-1. I always look for a high that hasn't been tapped yet. When we get into my strategy, you guys will understand where I'm getting at with this. But just to rewind it back, for those that's going to ask, hey, well, what lot size should you get into? Or hey, well, how many pips is this? For one, stop asking about how many pips it is. The pips really shouldn't matter. Understand it's all about your risk. So if you have a 20 pip stop loss and your TP is 20 pips and you're looking for a 10 to 15%, a best way to find and figure that out is by using this calculator here. This calculator is going to help you figure out what lot size you should actually enter if you want to risk 10 to 15% on your personal account. If you're doing a funded account, 1 or 2%. It's going to literally tell you that information here. Once you have that, that is what you will then enter into your actual trading view or MetaTrader or however you trading. So that's one. Now, after we understand that, okay, now risk is a big part. The next biggest part in trading is rules. I have very simple rules here. It literally says trading rules. 2 L's, I'm out the market. When I go live, you guys, for those that's new, subscribe. But for those that understand, has been tapped into the community, you guys seen that we had took 2 L's one of the days. And I said, guys, I'm ending this live stream here because this is my rule. And that's it. My second rule is I'll also look for 3 confirmations. 3 confirmations mean before I get in any trade, I need to at least see 3 confirmations. Now, I have it very basic here, which is market structure, price action pattern, and price momentum. But I don't also just look for those. I do look at Elliott Wave. I do look at Wyckoff, Fibonacci as well. Those are all of my confirmations combined, and I need to select any of those 3. It doesn't matter if it's market structure, Elliott Wave, and then a wave pattern, or if it's price action, momentum, and Fibonacci. As long as I get 3 for my whole bundle, I'm set. So I look for 3 confirmations, and I always make sure I get 3 confirmations. If I don't take the trade. So if we can follow just this simple trading plan here, I promise you, you will see a lot of tremendous success and consistency because you're now following and you're disciplining yourself with rules that you created before you got in the trade. So now, obviously, everybody wants a strategy, and like I said, this is cool, but it's not the strategy. It's really this. But let's go ahead and talk about the strategy. All right, so here we go. So what I like to do is when I analyze the market, I always like to pay attention to dollar. We're going to look at gold and dollar, for instance. Dollar is like my cheat code of everything else that I trade. I like to focus on dollar and analyze dollar because dollar will literally kind of give me a hint of what everything else is going to do, like gold, NASDAQ, GU, and all of that. So if I notice that dollar is dropping, then I will see that gold is going up. So let's go ahead and say that we look at the market, and as we are analyzing the market, we see that market is hitting up with gold. Well, what I like to do is I always like to start on a higher scale, and I like to ask myself, what's going on a daily? Are we going up or are we going down? On a daily, I clearly see that we're going up. From the daily time frame, I then ask myself, all right, are we at least coming to the point where we will pull back? Because everybody gets confused. They draw out this major key level, they draw out their order blocks, demand, supply levels, and they think that market is now going to make the biggest drop. And I'm like, no, that's never the case. We got to really follow what we see. It's going up, so we got to keep it like that. What really is happening is this could be a possible pullback. Well, here's the other problem. People don't know where the pullback can go, how far it can go, and so forth. I get that. What I like to do is I talk about midpoint and extreme. This is how I structure and simplify my strategy times 100. Like, I make it the most basic strategy ever. A lot of people like to complicate shit. If that's cool, if that's who you are, but I like to keep it simple. If y'all don't like simplicity, then y'all can go to somebody else to find complicated strategies or whatever to sound smart and sound pretty. I don't care. However, all I look for is this, the equilibrium. You guys hear everybody talk about this, right? It's what is basically balance. If something is too expensive, it has to pull back down, right? You guys can call this the whack off, ICT. You can call this liquidity phase, liquidity grab. All I'm getting at is there's so many rebranded names for this. Don't matter about none of them. All I'm literally telling you is this is how market reacts. So we pull down because price is too expensive. It's just like reality of life. When stuff is too expensive, obviously nobody's not selling it. Nobody can buy this because it's too expensive. This is over $100. Obviously, the corporate business or whatever has to drop the price down. That's just how life works right now. So they drop the price down. They drop it in a balance where it makes sense for everybody. What is a balance? If this was $10 and now it's $110, they drop it to the middle of 10 to 110, and that's the 50%. That's where Fibonacci 50% comes in play. That's where you get all of this. When I say that, that is literally me referring to my midpoint. I call it a POI, point of interest, because an order block, supply, demand, key levels, they're all structured at every high and every low. You guys can comment down below and say elsewise, but I promise you they're all structured in every high and every low. So if we look, then I simply say, all right, boom, we're tapped into this area right here. Now that we're tapped into this area, I also look for an extreme because market could still technically come to an extreme. So if I'm on a daily and I already marked these 2 levels out, all I do on a 1 hour is I just look for, once again, you guys call this change of character, break of structure, market shift. I don't care. I just see it as market is telling me that is breaking structure and is going down. So when market breaks that structure, it heads down. Now I know on a 1 hour scale, this looks like this is now the time to sell it to some of these levels here. And that's when we start tapping in. Now, when market taps into these levels, I then now wait for price to tell me that momentum is strong and I buy it. And that's all we do. So just to kind of prove you guys how simple the strategy is, this is literally what had happened here. We're on a 1 minute. It doesn't matter what time frame you're on. You will see this on every time frame. But we're on a 1 minute and you notice that this is my what I call range. From this range, impulsive trend, whatever you guys want to call it, rally, uptrend, we have liquidity. Liquidity is a high and low. Every time you see a high and low, it's liquidity. A lot of you guys see that support, resistance, order block, supply, demand. Same shit in my opinion, because banks see it as one or two things. They either see it as they're going to put more money here or they're going to take the money out. That is literally it. So all what happens is market taps into here, and as it taps into here, we then now start to see momentum telling us that the buyers are strong. Whenever I start seeing momentum, that's when I enter. And also, this is my extreme as well. So now I'm tapped in and I know that this is my extreme from this range. I know price is way too discounted. So now we need to see price rally back up. This is another term of whack off right here. Spring test right here. This is what a whack off looks like. Now that we have that, also another way that you guys can look at this is they are the same shit. Elliott wave, you can call this your wave 1 and wave 2, or for anybody that also looks at market like this, you can call this your rally to the upside, your pullback, and continuation. If you draw out your fibs, it's all the same stuff. I'm literally saying however you guys want to look at it is going to move the same way that XYZ looks at it. All right, I noticed that momentum was strong right here. We had a lot of buying pressure, a lot of wick rejections, and it was dying down. We even had like we guys call this a wedge, a diagonal, but we had everything to tell us. So what I did was took my first initial 1-on-1, roughly, I believe we had our first 1-on-1 roughly around these highs here. When I talk about a 1-on-1, I don't just do a 1-on-1 because, oh, it says it's a 1-on-1 here. No, I actually look for the most recent high within the 1-on-1. And that was basically this right here. So we tapped into that. Right when we did that, that's when I took out that first trade. Here, I unfortunately wasn't able to ride enough trades because I would be over leveraging my account, but I did 2 trades. We didn't tap into TP3. We actually did hit break even. So if anybody was riding this trade, this would have been break even trade. So as you guys see, following this strategy, you're not going to lose a lot of money because regardless if the trade doesn't go all the way in your favor, you still took profit or you made the trade risk free. That's the problem that a lot of traders have and can't follow. So guys, this is literally how I was able to grow my $4,000 account to 40K. And if you aren't, like I said, subscribe to my YouTube channel because you will miss out. You will miss out on a lot of stuff. And if you guys want to get tapped into anything else, all the links is down below. I will be doing another video on back testing this strategy so you guys can truly see it. We will be using a different platform than TradingView, which give us more leverage and more flexibility. It's called Forex Testers 5. Guys, we're going to be using that in my next video to test the strategy. So make sure you guys are tapped in. And other than that, guys, I'll see you guys. Take care of your boy Solo. Take care of Solo family. I'm out.